next panel is using alternative data to predict oil and energy movements. And it's actually kind of close to my heart because I came from a very fundamental background, was a TMT portfolio manager at Sigma, which was part of SAC. And the one sector I would never trade, well, actually two sectors. One was energy, and the other was healthcare or biotech. And a lot of it came down to the fact that I could walk in and, OPEC would make an announcement and your shorts would be up 8% and you didn't have a lot of control over that. But as we started getting into the kind of the data world about 4 years ago, one of the interesting areas for me was energy, and I think we're actually going to launch a sector-specific energy product this year. And it really stemmed from a RavenPack conference that they had, I guess in New York, was that September, October of last year. And it was around the metals and mining and also an energy strategy. So what I'd like to do is have everyone kind of introduce themselves and give a little background on yourself and the company, and then we'll dive into some questions.
JT Levine. I run the commercial side of financial services for Enigma. We are principally a data technology company that makes a suite of tools to sort of get across the gap between having data and actually getting some sort of operational and repeatable value from that.
And if we can dig into, you guys have kind of two parts of the business. So you have the energy side as well as...
We do, yeah. We have a lot more than just energy. We also, beyond the technology, we manage the largest repository of U.S. public data. It's a little over 100,000 different sets from about 4,000 different sources that run the full gamut. Energy data is certainly one of our most popular, but it also includes things like U.S. import records, the inspection of the restaurant that is going to make today's lunch, all kinds of stuff.
Peter?
My name is Peter Hafez. I'm the chief data scientist at RavenPack. RavenPack is a big data analytics company. We have expertise in natural language processing. We take in more than 19,000 news and social media sources and turn that into a structured data feed. We cover anything from companies, products, people, or positions. We also do organizations, places, currencies, and commodities. So we are multi-asset class product. And one of the key attributes of our data set is that we detect events and also sentiment. And that's probably what we are most known for. We became a product company back in 2007, so I've been part of the alternative data industry for almost 10 years. We sell into quantitative hedge funds and fundamental investors as well.
Great.
Hi, I'm Lars Johansson, and I am the global energy analyst at Ursa Space Systems. We utilize satellite imagery to provide oil inventories across the globe. So effectively, what we provide is transparency in an opaque world where most people don't have real-time data when it comes to oil inventories, which help our customers understand what implied oil demand is around the globe.
And maybe to JT, tell us where your data set is derived from, because it seems like it's more on the public side.
Yeah, so we source it directly from the states or from the federal government if we're dealing with offshore. Each state does it a little differently and sort of, yes, it's publicly available. That doesn't mean that it is in any way, shape, or form readily accessible. And you have to deal with a lot of sort of nuances. For example, in Oklahoma, gas is regulated by a different agency than oil. And as a result, you have two completely different data sets, even though it's come out of the same hole in the ground. So each state is a little different in what they release, but we bring in sort of everything that each state makes available. And yeah, it comes directly from the source, true to source, and we provide it faster than anybody else on the market.
And I guess one question, how is it delivered? Because we kind of try to...
Yeah, however you want is really the answer. That's where the technology side of the house comes in. We customize and tailor the delivery. And if you want something a little more curated to your needs, then that's completely fine as well.
Gotcha. And Peter, the metals and energy strategy you guys built or kind of talked about, can you just walk us through a little bit about that? And also maybe for the audience, was it commodity based? Was it long short equity? Like what was kind of the background on that?
Yeah, this particular commodities strategy that you're referring to was a future strategy. So basically what we did was we took our event-driven feed and just created an event-driven strategy focusing on events around these various commodities. So looking for when these commodities were mentioned in the news, in, let's say, news around inventory guidance or discoveries of new commodities and stuff like that. And we built a machine learning type strategy, an ensemble strategy. So we looked at 10 different approaches to creating this event-driven strategy and took an ensemble of these ones.
Were there, and there's multiple types of machine learning. Were there ones that tended to work best with your data? Was it nearest neighbor or deep learning? Anything that tended to be applicable?
I would say all of them kind of did similarly or pretty well, but I would say that the best ones were probably ElasticNet and also support vector machines did very, very well.
Great. And Raj, delivery, how do you guys deliver data to kind of funds?
Sure. Currently, we deliver data through an FTP site or through via email through a CSV file.
Okay, great. And then I guess the audience would kind of love to know, and I think a great thing, we work with all of these guys and JT on both sides, but take us through kind of an example of, how would you use your data to make money?
Yeah, so there's a variety. I think my preference is, my favorite is towards new wells. I think that's where the upside is the biggest. There's still, people are pretty good about once the well is sort of fully operational, kind of having a sense of how much oil to expect to come out of there. They're not nearly as good at that in the early stages of a well. And so using those data sets to see sort of where the new wells have cropped up, what names have access to those new wells and are operating them, and then what the flow looks like and the oil cut looks like is my preference, because I think that's the most upside. But you can certainly use it to, it correlates very nicely to revenue, and if you want to use it to just sort of track against quarterly projections, that's another avenue too.
And Raj, how about you're more macro focused? It seems like you've got more of the Asian kind of coverage. Would you trade your data more from a macro perspective, more from an energy perspective, or where do you think the best signal is?
The best signal is more from a macro and an energy, both from both sides. But what we provide is more of a 3 to 6 month view of a trade idea, as opposed to something that's more shorter term, okay, which some other people might be more interested in. But what we provide is for the global macro trader or the global energy trader who's looking for a fundamental data set that looks globally, as opposed to just U.S. data and WTI. We can, we help. Our data set is influential in looking at Brent Dubai spreads, which lead to Brent TI, and then to WTI. So there, as well as an effect on what might happen to the U.S. dollar index and so on and so forth.
Peter, anything on the timing side? Have you noticed, is it 5-day, 30-day, anything on the hold period that you guys have found?
It very much depends on how you create your signal. Of course, if you're taking a simple event-driven strategy, the holding periods are fairly short, so we're measuring in days. However, especially on the energy side, there's also been research done in building, let's say, supply side or demand side sentiment indicators, at looking at various sentiment dimensions, capturing political, societal risks, or economic sentiment as well. And these type of strategies tend to have longer holding periods. Like economic sentiment, you can trade, let's say, into a couple of months, where the environmental and political and societal risk are more short-term as well.
Gotcha. And what's kind of the split of business for you guys in terms of fundamental versus quant?
It's almost entirely quant.
Is that more because of the delivery and the complexity, or is
it's about complexity and capability, I think, internally. If you're not capable of working with a few million rows of data, we're probably not the right choice. If you're capable of bringing it in and running it through your models as quickly as possible, then we're the best choice. And so it depends really about kind of what the strategies are for the fund. And really from a data perspective, how kind of capable and comfortable they are with with large data sets and their abilities in there to do so. Otherwise, if that's not the way you guys operate, Drilling Info does a really nice job. And they've got cool maps, and you can see a sweet visualization, and that's all there for you. But if you can crunch it really fast and put it to work really fast, then that's why people pay us.
Gotcha. How about you guys, Peter?
We're probably also more tilting towards the quants. We're probably 80% quant. But we have been working in the last 2 years a lot on trying to make our data more easily approachable for the fundamental guys. So last year we launched a self-service platform where you can interact with our data in a more intuitive way and build your own data sets and create aggregates before you start consuming it within your model framework. So you can boil it down to just one number per day, for instance, per company or per commodity, if that's what you're focusing on. And also we launched a visual platform, so you can also consume it in that way. And so that's kind of now feeding into the way our customer mix is put together, and we see more and more fundamental shops picking up.
And Raj, how about you?
Currently, 100% of our customers are fundamental, either long, short, or discretionary. Because what our data does is it's a piece of the puzzle, part of the mosaic. It's not necessarily the silver bullet. But for instance, our China data set, which is the most robust data set that we currently have, most of our customers, whether they be hedge funds, banks, trade houses, or super majors, use it as complete as the missing piece of the balance sheet, of understanding exactly what's happening. For example, in China, the government doesn't tell you how much in total inventory there is, but what the month-on-month changes. So what we do is we give you what's actually in storage, broken down by what's SPR, what the teapot refineries have, as well as what other commercials have. And then you can use that data along with, we tell you how much total storage there is as well. So you can look at if you're hitting operational capacity or not, or if there's more room for growth in purchasing, if more imports can come in. So most of our guys use it as the missing piece to have a real time. So we deliver that data on a weekly basis, whereas the government, you're about 2 to 3 months behind. So we give you a real-time view of what's really going on in China. And let's be honest, you can't really trust the Chinese government. They have a tendency to fudge their numbers.
Gotcha. And what's the split, and it might be more relevant for you, JT, of kind of fund/finance versus corporate versus other customer segments for Enigma?
Our main revenue driver is Fortune 500.
And give us an example of kind of what you do for those guys.
So we do kind of a variety of things. The three biggest use cases for us are financial crime and compliance, so anti-money laundering. If you have an Amex card and you ever get flagged, which happens quite frequently because the monitoring rules are not very good, then we see all of that data and combine it for an investigation. We do a lot of supply chain tracking, so pharmaceutical drug safety, the biggest there, from raw ingredient all the way through to where it hits a shelf. And then a lot of work in credit risk and underwriting, for example, helping a commercial restaurant insurer bring restaurant inspection data into their actuarial models.
You guys are mostly finance, right?
Yeah, we're mostly finance, but we are seeing increased interest also on the corporate side. People that want to track, again, supply chain. Is there any interesting news on my suppliers or my customers or something like that, or competitors for that matter?
Raj, anything?
Most of all of our customers are traders or PMs who are managing portfolios.
Gotcha. And and I think Jonathan's up next on the compliance side, but with what's going on in Europe and MiFID II, have you guys seen any changes or on that front in terms of, I guess there's kind of one aspect of paying for research, hard dollar versus soft dollar. Have you guys seen anything, since that took effect, I guess, in January?
No, not for us. No, GDPR, yes, with a lot of the data privacy rules. We're doing a lot of work around identifying PII and that sort of stuff, but not on the MiFID or MiFID II side.
Yeah, I don't feel we have been impacted by it yet either. So, but still to see what happens.
We actually have seen an impact. What we've seen is a certain customer base of hedge funds, which don't want to necessarily pay the high fees that the banks want to charge, are looking for third-party research that's independent and verifiable, and they've started inquiring as to our data set.
Gotcha. Any questions from the audience before we wrap it up? Go ahead.
Yes, I saw at the RavenPack last year, your engine and simulation is very easy for event studies. Beyond oil, have you seen any good event studies? And for Raj, do you have any event studies kind of available, or can event studies be done on your data?
So Peter, why don't you start?
There's been a lot of work done, especially in the equity space, also looking at events, and Macquarie has done something in early days, quite interesting one, a pretty big comprehensive study, both looking at what you would call simple events, but also more complex events, where they try to align various event patterns into an overall complex event. So, for instance, as an example, looking at companies issuing new debt. It has a certain impact when they do it just once, but it becomes, let's say, a much stronger signal if you look at it. If a company has done multiple debt issuances within a certain time frame, or also looking at it's kind of like an event strategy, but looking more at sentiment trends. So looking at when you are exiting. Can you say a prolonged period of negative sentiment periods, and if you have seen that also being supported by a lot of insider trading, then that also tends to be quite a good event signal.
With our data, an event study can be done. For example, when a couple of years ago, when the teapot refiners were given quota increases as to how much they can export and produce, you could see that there was a sharp spike in demand in that area, and that would have sent you a signal that there would have been a greater price increase in oil. But it would have taken a bit of time for that. There was a lag between seeing the actual data come through and price effect.
There's more latency in your data.
Yes. Well, we were a leading indicator, so prices took a little bit longer. So again, when I mentioned earlier, there's a 3 to 6 month movement in price on our data because most people who look at our data are getting a heads up on a weekly basis, whereas most of the market is basing their information on a 3 to 6, roughly a 2 to 3 month lag, because they're looking at NBS and customs data.
Yeah.
You're welcome.
And following up on that, yeah, in terms of the RavenPack data that we trade, we found that 20-day tended to, for whatever reason, optimize tended to be best. When we were working with the Ursa data, it was true. You needed kind of like a 3 to 6 month hold period per strategy. But great. Well, thank you guys very much for doing the panel.